filed. That's the suspicious activity report, suspicious transaction report, and various other forms are required to be uploaded through this one central, login which is created, which is completely managed by the Financial Intelligence Unit of UAE. So, GoML registration is basically a two-step process where you first upload the basic documents of your company and the compliance officer, which you proposed, the person who will be taking care of all of the AML compliances. So at first stage, these documents are submitted. Once this is done, the supervisory authority gives the approval, okay, that, this person can be appointed as the compliance officer. Once the approval is received, we then receive a username. Once that is done, we then move on to the next step. That is, we create our organization ID and we again submit this document, and then the GoML registration is completed. So point number one, that is GoML registration, and point number two, that is the appointment of the AML CFT compliance officer. So these two things are clubbed in this first step, that is GoML registration and appointment of the compliance officer. Now let's talk about that. What are the qualifications that a compliance officer is required to have? The law does not specify that they are required to have or hold some kind of degrees or anything of that sort before being appointed as the compliance officer. But the basic things which are mentioned in the law is that that person should have expertise about that knowledge and should be able to carry out the ML compliances in an independent manner. So these two are the basic requirements for any person to qualify and be appointed as the compliance officer. Once these two steps are completed, we then move on to the most important part of the AML law, that is the entity-wide risk assessment. Okay, entity-wide risk assessment is where we calculate the risk of our own company. So when we say that I'm going to calculate the risk of my own company, so the first thing that I need to consider is what are the factors that are going to affect my company's risk. So the basic risk that will be affecting my company would be the customers I'm dealing with. What kind of customers I'm dealing with, whether they are PEP or whether they are belonging to some, defense industry, or whether they are high net worth individuals. So all of these factors which comes under the basket of customers are going to impact me. Correct. If I say that I have a client base which is, high profile. So of course, there are added risk and associated risk with when we deal with those kind of persons. The second aspect that is going to affect us is the geographies which they belong to. Like, what are the nationalities of my customers? Say, for example, like, if somebody is coming from a high risk jurisdiction, or if somebody is coming from blacklisted country. So these are the risks that are going to affect me. So I'm going to evaluate my company's risk basis these factors. The first I discussed was customers. Second was the geographies. Third is the transaction, products and services that I'm offering. Like, what kind of product I'm offering. Like, say, for example, if I'm a dealer in precious metals and stones, of course, my product is itself risky. What kind of services I'm offering? Am I offering restructuring services, incorporation services, or offering nominee director services? So what kind of services I'm offering? That is also one of the risks. Fourth is the delivery channel. Like, how am I onboarding the customer? Whether it is through face-to-face transaction or it is non-face-to-face transaction, how am I onboarding them? Fourth is the transaction. How I am completing the transaction, as in what is the mode of payment that I'm accepting? Is it cash? Is it virtual assets? Is it proceeds of virtual assets? Or it is through the normal banking channel or through wire transfer? So these are the risks that are going to affect my company. So as I discussed this risk, we are required to evaluate on the quantity and the quality. What kind of customers we are dealing and what volume of transactions we are dealing with them. So once we evaluate, we come to know that at which particular area my company is at a larger risk. So by this exercise, we come to know that what area I need to put more resources. So this is one of the most important thing that we are required to do. The AML law says that we are required to have a risk-based approach. That means wherever there is more risk, we put in more control. For example, I have my 80% client base as a politically exposed person. I have to make sure that I have proper mitigation measures to deal with those kind of customers. If I have occasional transactions or if I have, one-off transactions. So accordingly, my risk will also vary. So by completing the third stage, that is by conducting the enterprise-wide risk assessment, we come to know that as a company, where I am at a larger risk. Once that is done, we then move on to the next step, that is having our, drafting our AML policies, procedures, controls, and documentations. So at third stage, we've already understood that where I need more control. Once we have evaluated that, we then draft our AML policies in accordance with the risk that is already identified. Okay. Now, AML policies and procedures is like, there are a lot of things that has to be considered when drafting AML policies. Like it should have details about what customer due diligence process I'm going to follow. We should have a standard red flag list, that has to be updated. Then we are also required to have a standard KYC form, and various other templates are required to be there as a part of our AML compliances. Now, we have discussed point number 1 to 4. Now, this I'm talking about more. This is more about documentation part. When I move on to the next step, that is the point number 5, that is the KYC. That is the practical implementation of these policies that we've already drafted. So point number 5 says that whenever we are onboarding any customer or a client, what are the basic KYC that I need to do in case if that's a natural person or that's a corporate? In case of a natural person, we are required to seek ID proof, address proof. In case of company, that is the corporates, we are required to seek trade license, memorandum of association, and address proof. Okay. Now, in companies, there is an added responsibility that we are also required to perform KYC of the UBOs. When I say UBO, I mean ultimate beneficial owner. That is, those persons who are holding more than 25% of shares or either voting rights or either controlling rights. Okay. We are also required to take their KYC documents. That is the persons who are actually going to be benefited with that transaction. Because company is not a natural person. It is a legal formation. Okay, so there are persons behind that who are managing the entire thing. So we are required to identify the ultimate beneficial owner also before onboarding. For natural persons, it has to be address proof and ID proof. And in case of companies, we are required to seek trade license copy, memorandum of association, address proof. Now in address proof, one can take any documents like, utility bill, bank statement, or municipal tax record, or lease agreement. Checking the validity is also important. And also, in case of companies, you also see KYC documents of the UBOs. Correct? Now, once we have taken all of these documents, we then move on to the next step, that is screening. AML law in UAE mandates that we are required to screen all our customer clients through the UNSC consolidated list as well as UAE local terrorist list before we onboard them. This is one of the most important rule that we all have to follow. Now, one thing to note here is that screening requirement is applicable to all the natural persons and to all corporates who are operating in UAE, irrespective they being a DNFPB, financial institution or VASP. AML law is applicable to the DNFPB sector, financial institution and VASP. But the screening requirement, okay, is applicable to all of the companies to whatever sector they belong. If I'm an IT company, still I'm required to screen the customers before I onboard. Okay. So for that, once screening can be done through two ways. It can be done manually as well as it can be done through a screening software which are widely available in UAE. Okay. Now, when we screen a person, so there is a possibility that a person could be a full match. When I say full match, I mean that that person's name is matching in the UNSC consolidated list, or it could be UAE local terrorist list. Correct? Now, in that case, what is the compliance that we are required to look at? In case, if there is a full match, in case of our existing customer, we are required to immediately freeze funds, block all the transactions, and reject that client. Okay. And in case of potential customer, that is in case if there is an inquiry, okay, it is still the transaction is still at the discussion stage. So in that case, you are required to reject that client. You cannot work with a person whose name is matching in the UNSC consolidated list as well as UAE local terrorist list. Okay. In case of existing customer, there is a possibility that you might have some advance, okay, or you are required to give some kind of service or goods to that person. In that case, there has to be freezing measures. That means you did not give back the money, you do not provide any services to that person whose name is matching with the UNSC consolidated list as well as UAE local terrorist list. Okay. In that case, we apply freezing measures and immediately we are required to file fund freeze report, that is also called as FFR, through the GoML portal. Okay. Now, this was the first possibility in case we screen a person. The second possibility is that it could be a partial match. That is, it could be partially matching with the name in this list. You are not sure whether this is the same person or not. Okay, in that case, you classify that person as high risk and you do not onboard that client till the time you've got some clarity on that. Okay, in that case, you are also required to submit partial name match report through the GoML portal. Okay, so are we clear till now? When we screen a person, there are three possibilities: either a full match, a partial match, or no match. In case of full match, we submit fund freeze report and we ourselves apply freezing measures in case of our existing customers. And in case of partial name match, we submit partial name match report. Now, in case if there is no match, okay, not matching with any of these two lists, that is UNSC consolidators list and UAE local terrorist list, we move on to the next step, that is the risk profiling stage. Okay, so before I discuss the risk profiling stage, I will give you some more details about the screening. Now, when you are screening a person through a software, okay, softwares generally have lot of list in, combined in that software. So whenever you screen a person and you get a match, it is very important that we evaluate those screening reports and straight away do not come to a conclusion that it's a match, I cannot work. See, the matches could be maybe for some adverse media, or it could be a match for a politically exposed person, or it could be a match with some other sanction list. Okay. UAE follows only two sanction lists, that is UNSC consolidated list and UAE local terrorist list. Only two lists. If any of the matches are coming from these two lists, only then we apply freezing measures and only then we file FFR report. In any other case, you can opt for filing STR as the case may be. But if it's a politically exposed person match, you are required to apply appropriate due diligence measures. Okay. And when I talk about manually screening, you can go to the website called as Executive Office of Control and Non-Proliferation, where you can get access to both of this list. Okay. We are required to subscribe to those websites wherein we receive regular emails from them. That say, for example, 2 persons are added, 141 entries are amended, or 3 persons' names are removed. So these kind of updates email would be received by you. Okay. So when you receive this email, you can straight away go to the link which is provided in the email. You can check the names which are added, amended, or removed. verify it from your own customer database, and then you're good to go. So there are two measures, two ways how you can apply screening measures. One is manually and second is through the software. Now let's understand it at what instances we are required to screen. The first is that whenever you are onboarding a customer or a client, you are required to screen them. Second, whenever you are having a transaction with that person, be it that you have a regular relationship with that transaction, I mean, with that client or a customer, you are again required to screen them before you are effecting any transaction. So before onboarding, before having a transaction, and third is ongoing screening. Ongoing screening is wherever, that means whenever there is a match or additions, as I said, additions or deletions in the list, you are required to screen your entire customer database to make sure that in case if, say for example, 10 people are added to the UAE local terrorist list, is there any matching with my customer list or not? So the intention of screening your customer every time whenever there is addition is to just make sure that whatever additions are made in the list are not my customers or not my company's customer or not my company's clients. So for that reason, we are required to screen them regularly. Okay, so there are three instances where you are required to screen the customers. Now, let's now move ahead. In case after screening, if there is no match, you then move on to the next step, that is risk profiling. When I talk about risk profiling, I mean that all the customers that you are going to onboard are required to be segregated in three baskets on the basis of risk analysis of your customers. Now, those three baskets are low, medium, or high. Say, for example, if I am your client, okay, I belong to UAE itself. So I am a low risk category person. I don't have any adverse media. I'm not forming part of any sanction list. And, I'm not even a politically exposed person. So I am a low risk person to you. In case if a politically exposed person is coming to you for any kind of services, he is by default a high risk category person. So you classify your customers into three categories. Either it could be low risk, either it could be a medium risk, or either he could be a high risk customer. So there are certain parameters which we are required to set in our organization to make sure that we are categorizing them correctly on the basis of various factors, like say for example, if that person has committed some kind of criminal activity, so that could be a high risk person. If that person has committed some tax fraud, or he has been involved, or he's a part of any money laundering litigation or something like that, so that could be a high risk category for you. So we have to set some internal rule that this kind of customers we treat them as high, or this kind of customers we are not going to work with, just to make sure that we are not at fault at any point of time. So previously when I told that you seek basic ID proof and address proof, so that is called a standard due diligence. There are two types of due diligence. One is standard and second is enhanced due diligence. For low risk and for medium risk customers, you apply standard due diligence. But for high risk customers, in addition to the standard due diligence, you are also required to take some other additional due diligence measures. So that is called as enhanced due diligence. Okay, so as per the law, there are some by default categorization. I mean, some customers are required to be by default be treated as high risk as per the law. Now, what are those customers? Now, any of your client or customer coming from grey listed countries. That is, FATF has defined some 23 countries as grey list countries. Okay, so you are required to treat them as high risk client at any point of time if they are coming from those nationalities. Second, targeted financial sanction countries. That is the list issued by UNSC. Okay, that is a list of 9 countries which we are required to treat them as high risk. Third category is politically exposed person and associates and close relatives of politically exposed person. Okay, these three categories are required to be by default treated as high risk client. We cannot treat them as lower medium. Now, the customers or clients coming from these three categories, what is the additional due diligence that you are required to take? First, the basic standard due diligence we already discussed. In addition to that, we are also required to obtain source of funds, source of wealth. Source of funds as in for particular transaction where the money is coming from, or if it's a transaction which involves huge amount, okay, so whether that's an accumulated wealth or it is through salary income, is through business income. So the crux is that you have to identify that whatever transaction that person is doing with you, from where the funds are coming. Okay, now, in addition to that, we have to make sure that after, source of funds, source of wealth you've already obtained, the first payment has to come from that person's account itself. It cannot be from any third party. And the third requirement is that before we are, we are having or conducting any kind of business, they are required to make sure that we have taken approval from senior management before onboarding or having any kind of transaction. Okay. Now, if you see after risk profiling, if I have categorized that person as low and medium risk, I can continue my business with that person as usual. Now, in case it's a high risk client, I perform enhanced due diligence, and after performing enhanced due diligence, I can continue business as usual. I think, are we clear up till now? Great. Now, after the due diligence process is completed, in case in the entire process at any point of time, if you observed any kind of suspicious behavior or activity or unnecessary nagging about not providing documents, why are you following this law, and if you find some weird behavior from their end, that is your client or customer, you can go for filing suspicious activity report. Once the transaction is done, okay, and if you realize that, say for example, 2 months ago, I had done some transaction, but I now realize that, it was a suspicious one, I can go and file suspicious transaction reporting. So when the transaction is not completed, it is at the discussion stage or it is a proposed transaction. In that case, you go for filing suspicious activity because the transaction is not done yet. Okay, so you go for filing SAR. That is also available and that can be filed through GoAML portal. Okay, now coming to suspicious transaction reporting. Whenever the transaction is completed, okay, or the transaction is done, products are, we have sold the product or we have provided the services, but later on you come to know that that was a suspicious one because of some current activity, you can again go and file STR. One thing to keep in mind is that filing STR or STR is when you realize, okay, when you have a realization that, okay, this is a suspicious activity, then we have to report that immediately. So there is no such time barred, that, okay, I had a transaction 1 year ago, I cannot go and file STR. It's not like that. It is from the point of realization, from the point of you being coming to know that it was a suspicious one. Irrespective of the amount of the transaction or amount of the fees that you have charged, and irrespective of the volume. Okay, for dealers in precious metals and stone, there is no such limit on quantity of gold that you've sold. Okay, there is no such limit. Irrespective of your volume, amount of transaction, you can go and file SAR or STR. That is on point of your realization that you understood that there is some red flag and you need to report that. You have to do that immediately. Okay, now you've already completed the business. Now comes the ongoing monitoring. Ongoing monitoring is basically you monitor your business relationships with your client. That say for example, if you are a dealer in precious metals and stones, you know that you have a contractual relationship with one of your supplier, and he generally buys say for example 5 kgs of gold, but suddenly the purchases are increasing. The payment mode has also changed from normal banking channel to cash transaction. Okay, so that is what that could be one of the red flags. And that you would come to know only if you are monitoring those, monitoring the transaction, monitoring the business relationship. Okay, that I'm talking about ongoing monitoring of your client on transaction basis. There are various other methods which one can adopt when setting the ongoing monitoring policy. Say, for example, you can write in your policy somewhere that you all the transactions with the gray list countries, you're going to monitor them closely. And as a part of ongoing monitoring, you will come to know that any of your clients' documents are, expired, or you need to have, you need to update your customer database. If you have, say, for example, 10 associate business partners, or you have 10 suppliers, you have to make sure that their data is updated in my particular, customer files at any point of time. That is, if the trade license copy has expired, you have to voluntarily go back to them and ask them for that copy. If there is any UBO and the passport is expired, you have to go back to them and ask them to submit it to you. So this would be the outcome of your ongoing monitoring. You will monitor the transaction, you will monitor the business relationship, you will monitor the CDD data that you have. Now, as a part of ongoing monitoring, if you came to know that, the UBO has changed or the company has changed its name now. So in that case, you again perform the entire KYC for your particular client or customer. Okay. Now, so far, I hope it is very clear. I'll just give you the brief and then we can move on to the next part of this particular webinar. GoML registration, appointment of compliance officer, conducting your own entity-wide risk assessment, drafting the policies according to the evaluation of the entity-wide risk assessment. This is the practical documentation part, then performing the actual KYC, like implementing your policies, performing KYC, doing screening before onboarding, risk profiling, enhanced due diligence in case of high risk customers, low and medium risk customers, you can apply standard due diligence measure. In the entire process, if you find any suspicious activity or suspicious behavior, or you realize it was a suspicious transaction, you can go and submit SCR, STR respectively through the GoML portal. Ongoing monitoring part then comes the part where you ask for the documents which are expired. In case if there is any change with respect to the client information, you again repeat the entire process of KYC. Correct? Now, the 12th point, if you see here, I'll talk about the record keeping measures. The entire process that we followed, okay? Customer due diligence, screening, and at every point of time, there would be certain documentation generated or some records which would be generated. So all these records are to be preserved for a minimum period of 5 years. Okay. Now, this 5-year period starts from where? From the last the last transaction you conducted with the client. 5 years will begin from that. One very important thing to note is that in case during the entire process, if anyone has received inspection, okay, fresh 5 years will start from the date on which inspection was done. Say, for example, I have already maintained my particular customer file for a period of 3 years. In the 3rd year, I got an inspection notice. The entire process was completed. So, from the day I received an inspection, the 5 years period will again start. So, the one record that I talked about that I've already maintained for 3 years, it would be 3 plus 5. Okay. So, the total would come to 8 years. Correct? Now, so one has to be very sure, and you have to be very diligent that all of the records are maintained correctly. Now, there is no such requirement that, you have to maintain the records in a certain manner. It could be either in hard files, or it could be, saved in soft copies, or it could be combination of both. Okay, are we clear so far? Okay. Now, there are some additional requirements apart from this thing that I have discussed with you. One is appointment of an independent auditor who will be verifying the AML records. Now, that is something that we have to get it done annually. We have to make sure that we are appointing some independent auditor to check our AML records. Okay. Now, there is no such qualifications prescribed in the law with respect to who can be the independent auditor. The person who is auditing the records is just required to be aware about the AML law. Okay. And he should be not, there should not be conflict of interest for any person who's conducting the audit of your company. He should not be actively involved in your AML compliance, and he should not be actively involved in your day-to-day business activities. So these are the basic two requirements provided under the law. Now, apart from that, there is this requirement of submission of DPMSR report, that is dealers in precious metals and stones report, which is to be submitted for cash or wire transfer transactions, which is greater than 55,000 dirhams. Okay, that is something we have to look at. So also, I would just like to share with you that there are certain guidelines also issued by ministry, wherein they have given some FAQs, what will be covered, what will not be covered. And the same is available on our website also. You can go through that. You will have a very clear understanding as in what transactions will come under DPMSR reporting and what would be excluded. Okay. Second is REAR report. Real estate activity report is applicable to real estate sector, real estate agents and brokers, as well as law firms who are involved in transactions related to freehold property. And the mode of payment could be cash, virtual assets, or proceeds of virtual assets. Okay. Now, if it's a cash transaction greater than 55,000 dirhams, REAR report is required to be filed. And irrespective of the amount, if the transaction is done through virtual assets or proceeds of virtual assets, you are required to file REAR report. Okay. Then comes the submission of annual AML CFT risk assessment report. That is, EWRA is required to done annually. Okay, that is something which is to be done annually and has to be updated at any point of time. Second is periodic reports to senior management. The law says that we are required, the compliance officer is required to submit a periodic report to the senior management. Okay. Now, what will be the content of this periodic report? It would be, the basic summary of the transactions which are done. Like, say, for example, how many high-risk customers were onboarded, how many screenings were done, how many ongoing screenings were done, how many transactions were monitored in a particular period, how many politically exposed persons were, onboarded. That is something also be part of the periodic report to the senior management. Now, the senior management is required to review this report, which is submitted by the compliance officer. Senior management is required to review and add comments on that. Once that is done, you have to keep that in the records. As and when the supervisory authority will ask for those periodic reports, that has to be submitted to them. Okay. Now, submission of HRC and HRCA report. Now, HRC stands for High Risk Country Transaction Report and HRCA stands for High Risk Country Activity Report. That is the report that you have to submit in case of any transaction or activity done by yourself or you have observed through your customers with high risk countries. Now, high risk countries means Myanmar, North Korea, and Iran. These are the three countries. In case if you observe any transaction or activity, you are required to submit HRC or HRCA report. In addition to that, mandatory AML training for the compliance officer and the staff on regular basis. So the AML law is not only applicable just to the company, but it is the responsibility for compliance lies on the company, the UBOs, the management, employees, staff, everybody. And they also ask that senior management, every person has to be actively involved. They should be aware what AML is. So it is very important that the staff is trained on this subject. whenever a new staff is being appointed, one has to make sure that they are being, taught or being informed about what AML is and what is something their responsibility as a part of, as a part of being into this organization. Thank you very much for being part of this webinar, and we'll definitely get in touch with you with respect to your questions that are being being posted here. And also, in case if you have any other doubts, also you can reach out to us. Okay, this is our email ID, which is flashing currently on my screen. I hope everybody is can view that, and you can send an email to us, connect with us in case of any other inquiries or as well as questions. Thank you so much. Thank you so much for patiently being part of this webinar. I see a lot of questions. Please, please, please do send us an email ID. The email ID is flashing right now. Please connect with us on info@aml. Sorry. Thank you so much.